Okay. I think we're live. Good. We're live. We're live. So welcome, guys. Welcome to another day. Welcome to daily online seminar, where every day by 9 p.m. we meet on the daily online channel on YouTube, on Facebook, on our website. We meet on Twitter likewise. We meet every day by 9 p.m. Monday through Sunday. We meet and we share valuable information that will take you and your business to the next level. And today is Wednesday, where we talk about financial trading. And today specifically, we're talking on the Forex market. The Forex market is a very big market. I think this is the second, no, is the world's largest financial trading platform, where money exchanges to the tune of above $6 trillion on a daily basis, exchange hand across the globe. And that is what we'll be looking at, how you can be a player in this industry, in this sector. Well, what we're talking about today is something that is very vital, that you need to pay serious attention to, because it has been affecting lots of people. This has been affecting lots of people, and we're looking at how you can dominate this stuff and also be in charge of your Forex trading business and be in charge of the market in entirety. What is that we'll be talking about? We're talking about two key differences between live and demo accounts in the Forex trading market. The two key difference between live accounts and demo accounts in the Forex trading business. When you want to start the Forex business, the first thing you start with, any expert, anyone, we advise you, is to start with the demo account. What is the demo account? The demo account is simply the practice account, where you are given virtual fund by the Forex brokers. You're given virtual fund, not real money. You use it to practice the Forex market, to practice your trading. You use it to trade, to perfect. So it's all about practice. Say practice make perfect. So you use it to practice. And when you get to a point where you are good to trade, then you can start implementing, you can now switch over to your live account. Now, live account is where your own money, you have put your own money into the trading platform, and you start trading to make profit. And whatever money you make at this time is real money, and is for you to withdraw and use for your personal use. Why demo account is not real money? No matter how much you make in demo account, you can't withdraw it because it's not real money. It's just a practice account. Why live account is real account, where your own money is involved this time, and you trade and you make money. So these are the two. This is what live account is and demo account is. Demo account, practice account. Live account is real account. Money is involved. Your own money is involved. Demo account, no money. Your money is not involved. Just some virtual money given to you. Now, these two accounts, they are same, just the money involved. But now there are two key things, two key major differences between when you are trading a demo account and when you switch over to a live account. There are two major things, and these are the two things that I want to discuss about today, because it has been running so many Forex traders around the globe. And I think we need to treat this so that you can know how to handle it without any challenge. So that's that. Without taking much of our time now, we'll go straight to the first thing that affects the Forex market. Sorry, 1 minute. Good, thank you, I'm back. So the first thing, that the first key difference in the Forex market is what? The first key difference between live account and demo account is psychology, your psychology. Trading psychology is an important aspect of trading Forex or virtually any other security you're trading. Trading psychology is associated with the trader's mindset and how they are managing their emotions, thought processes, and trading decisions. It is how you manage your emotion, how you manage your thought process. Trading psychology is a broad term that includes all the emotions and feelings that a typical trader will encounter when trading. Some of these emotions are helpful and should be embraced, while others should be discarded. Now, this is it. When you're trading Forex, there are certain things that happen when you're trading a demo account and a live account. There are some psychological feeling that happens when you are trading these two things. Now, we want to go straight to this basics psychology while trading demo and live account. Number one, emotions. You see, greed, fear, excitement, overconfidence, nervousness are all typical emotions and experience that a trader will always have when you're trading. When you're trading a demo account, because you know your money is not involved, so you feel there's no fear, there's no anxiety. You feel free. You just place an order and the order is there. You hit your take profit, fine. You hit your stop loss, all good. There's no anxiety. There's no stress accompanied to this whole thing. So one thing you need to know, but when you switch over to a live account, now your money is involved. By this point, you realize that emotions comes into play. You get greedy. And emotions come into play. You get greedy. You become nervous with the movements of the market. When the market is going in your favor, you're happy, you're excited, you're confident. But when the market is going against you, you get afraid and you get so nervous, feeling this market will go against you. So because of all of that, it is good that you manage your emotions. You need to realize that demo accounts and live accounts, it should be treated the same way. The way you manage your demo account should be the way you manage your live account. Demo account, even though it's a practice account, that is where you should be able to build on your psychology. That is where you should be able to work on your psychology. That is where you're able to build your emotions. You should treat it like a live account. You shouldn't see that just one virtual fund, not real money, and you just say, if you lose, you lose. After all, it's not real money. No. But when you treat it that, yes, it's like your money, you treat it like a live account. Everything, every trade you place, every entry you go in, you're taking it like a real live account. Until you treat it like that, you won't be a successful trader in the Forex market. Another thing about the psychology is FOMO, F-O-M-O. We call it fear over missing out, fear of missing out. Now, traders need to identify and suppress FOMO as soon as it arises. Why this ain't easy? Traders should remember that there will always be another trade and should only trade with capital they can afford to lose. Now, fear of missing out actually means, you see an opportunity to enter the market. And maybe while you're doing your analysis, you notice the market have actually gone the exact location your analysis is showing you to go to. But it has already gone far. And you're looking at it's going to a resistance level, to a support level. But because you feel the market is going your direction, either bullish or bearish, and you feel, no, you need to jump into this market. This market will go. This market will go. You don't want to miss out of this trade. You just bump into it. No. That is one psychology, fear of missing out, that people experience, especially when trading a live account. But you need to understand that there will always be more opportunities in the market. So if you miss out in one, you know that there will always be more and more today, tomorrow, next week, next month. There will be more and more opportunity for you to trade and make good money for yourself. So you should be able to kill the fear of missing out, FOMO. Because some people, why trading demo account, there's no FOMO, because they feel it's not a real money. They are not getting anything. forgetting that they're actually gaining experience, they are gaining knowledge, forgetting that it's only during live accounts their FOMO now comes into play. But the thing is that you need to understand how to control FOMO, fear of missing out, because if you can control that and you know that there will always be more opportunities, and know that you mustn't trade every opportunity. So you can let so many go, and you let so many go and you win so many. So that is one thing with FOMO. Another psychology is greed. Greed. Greed is one of the most common emotions among traders and therefore deserves special attention. When greed overpowers logic, traders tend to double down on losing trades, or traders tend to double down on losing trades or use excessive leverage in order to recover previous losses. This is the big problem, greed. Now, this is it. Somebody is trading, you're trading, and you feel the trade is going against you. Because you feel you want to recover, you go and place more trade. So feeling that, okay, you recover all and you make more money. Big mistake, big mistake, big mistake. Or trading with a bigger lot size, increasing your lot size, increasing your leverage. That is a big, because you want to make more money. That is a big problem. It is critical for traders to understand how to control greed when trading. You need to know how to control your greed. In every trade, there's something I want you to know is that when you're able to overcome greed in Forex trading, in your live account, you will know that you can actually you can win 70% of your trade if you overcome greed. Greed makes you to overtrade. Greed makes you to do the things you ought not to do. You're losing already. Allow that trade to go. There'll always be a lost trade and there'll always be a winning trade. But if you know what you're doing, your winning trade will definitely be more than your lost trade. Now, this is it. When you're losing a trade, let it be. So many people, when they're losing a trade, they want to place another trade. So they want to place another trade. They keep placing on that trade, feeling they can use it to hedge over that one or counter over the one that is losing. Big lie. If you don't watch it well, now you're a Forex trader, tell me, of all the times you've tried to do all of that, you're in a losing trade and you're placing another one, of all the times you've done that, on a scale of 100, how many have you won? You realize that you even lose more and more, and you get so angry with yourself. Why did you place so many trades? So that is one thing you need to watch out. Greed. Greed is the biggest killer in the Forex market. Very, very big killer. Very, very big killer. Now, another one is overtrading. New traders often tend to look for opportunities wherever they may appear and get lured into trading many different markets with little or no regard for inherent differences in the market. You need to understand one big thing again. After greed is overtrading, they work hand in hand. Because if you're seeing so many opportunities, you're seeing so many, okay, there's a bullish market, the bullish Euro US is bullish, Euro CHF is bullish, USD JPY is GBP USD. You're seeing good everywhere. You're just seeing opportunity and you're just placing trade left, right, center, and big mistake that Forex traders do. Now, when you overtrade, it kills you. It kills you. You're killing your finance. Because you're spreading yourself. One thing with Forex is that plan your trade and trade your plan. Plan your trade and trade your plan. Overtrading will send you back to the village fast. Overtrading will send you into bankruptcy. Overtrading will make you broke faster. You should be able to plan your trade and trade your plan. Trade according to your strategy, not your feelings. Don't say, there's so much opportunity today for you to trade. Whether there's 10 different opportunities for you to trade, pick some and leave the rest. Pick the 3. Look at all the 10 opportunities, 20 opportunities you see. Pick like maximum 3 that you know are very sure, very, very sure. You feel these 3, the top 3 surest of the 10 or 20 direction trends you've gotten. You feel the top 3 you feel in quotes are bets, are more surer than more surer. Top 2, 3 is okay for the day. Place it and you're good. you're good. 2, 3 is okay, and you're good. So over trading is a big problem. It's like that people feel why trading a live account. And even when you do that in your demo account, the problem is that when some people do it in a demo account and they lose, they don't bother. And sometimes they will do it in a demo account, they will win, keep trading, keep placing it, keep placing the trade, keep placing the trade. And you see, those trades will be going in. They'll be getting, hitting the take profit, hitting take profit, hitting take profit. But when it's a live account, because emotion and anxiety comes into play, before you know, when the market is still ranging and deciding where to go, doing 1 or 2 shaking here and there, it might be at the negative of you, or maybe at your negative, and you feel, no, all this trade you have placed, no, if this market go against you, fear comes into play, and before you know, you start closing your negative trades. So that is why you should watch over trading. Another one is implementing risk management. You need to implement risk management in your psychology, because these are what affects people that trade. The significance of risk management. Now, this one is a situation whereby, especially in your lot size, in the volume, you see, you need to understand that because you have big accounts does not mean you must trade very, very big lot size. You should be able to apply risk management. Risk management is very, very key, because there are trades you're going to lose. There will always be a lose trade. You always lose 1 or 2 trades, and there will always be winning trades. But like I said earlier, your winning trade should be far bigger than your loss trade. So when you do your risk management, if your risk management is in place, no matter your losing trades, your lose trade will always exceed them. And that is why you're able to know that one of the greatest ways to decrease the emotional effect of your trade is to lower your trade size, lower your trade size, your lot size, lower it. Don't over trade it. Don't expose more than 20% of your finance in the market. No, don't ever expose more than 20% of your finance on a trade, on any particular trade you go into. Don't expose more than 20%. You see, the aim of this business is to last in the business. You want to last in the business. You want to stay long in the business to make money. It's not a get rich quick scheme, No, that's a bigger mistake so many people make. They want to double their money in 24 hours. They want to double their money every month. Is it possible? Very true. You can double and triple your money. You start with $1,000. That $1,000 can be $3,000, $5,000 by the end of the month. Very possible, doable, and people are doing it already. But what about you can likewise lose that $1,000? Have you thought about that? So that is why you should work on your risk management level and know what you're doing. Now, these are some of the psychological traits that people have. There's another myth that people have, trading myths that people have, the trading myths that people have, that individuals are often influenced by what we hear, and trading is no different. There are many rumors around trading, such as traders must have a large account to be successful, or that to be profitable, traders need to win most trades. You don't need large account, You don't need large account. Your account mustn't, for you to be a successful forex trader, you mustn't have a very large account, $10,000, $50,000, $100,000. It's not true. See, as little as $200, $300, $500, you can start growing from there. I have built when my starting days, I started with $100, and I burnt my first account, burnt like my first, second, third, fourth, fifth account thereabout. I burnt them. Then it was subsequently, and now I now understand everything. I start working, I start building. Was it $120, $120, $150? I started with back then, so many years ago, more than 15 years ago, that I started. And ever since then, I've been able to grow that account to something huge. So you can start small and grow big. There's always room to start small and grow big. That's just it. There's always room for you to start small and grow big. So you don't allow FOMO to kill you. You don't allow fear to fear and greed. Now, how can Forex traders psychology be improved? How can you improve your psychology when you're trading Forex? Number one, get yourself in the right mindset. You see, for you to be, you need to work on your psychology when you're trading either demo or even live. You need to be at the right mindset. It's not when you are angry, your wife annoys you, or somebody gets you angry, something happened, you got a bad news somewhere, and you just come and open your laptop, or you go to your phone, you want to place a trade, you want to analyze the market. You won't have a good judgment of that time because of psychologically you are stressed. So that is going to be one of the worst time you're going to place a trade. So you need to be at the right mindset. Another thing to improve your psychology is what? Have a great base of knowledge. Have good knowledge of the market. Have good knowledge of the market. When you have good knowledge of the market, or even if somebody is guiding you, then the person have a good knowledge of the market, and the person is giving you a good guide to enter the market. Maybe signals, the person is giving you what have you, then that is it. But if it's for you alone, just have a good basic knowledge of the market. Don't just trade anyhow because you feel it's a demo account. No, treat your demo account like your live account because it matters. It plays a very, very big role. Now, imagine winning. Another psychology is another psychology you need to have to improve your trading is imagine winning. Before you go into that trade, just see yourself you have won that trade. Just imagine it that you have won. What are those things what are the emotion you will have if you win a trade? You'll be happy. You'll be excited. Be excited for that trade because you've done your analysis. You believe in that trade. Go into it excitedly. Believe it, you'll win because you have done what you need to do. So be optimistic about that trade. Now, another one is also imagine what? Losing that trade. Now, when you also know that you can lose that trade, it's just like saying, before you do this, I'm losing this trade. Oh, you know you're going to lose the trade. And you're still going into it. Now, once you know that you already built this thing, as oh, well, if I lose it, well, it's part of the game. It's a market that you cannot control. It's a market that millions of people are trading at the same time. So anything can go, irrespective of your analysis, fundamental, technical, something can go south, something can go missing somewhere, and you lose that trade. If you lose it, will you die? Will anything happen? So you take it as a game, as a sportman, that you could also lose that trade. Another one is what? Remind yourself that it is real money. Know that it's real money. So you need to do what you need to do to win that trade. So you want to win that trade. So you do all you can as a businessman. You want to win that trade. You need to get your facts, your analysis right, then you get into the market. Observe the habit of successful traders. Other successful traders don't overtrade and they always plan their trade and they trade their plan. Practice. Use your demo account. Practice, 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 practice fundamental analysis, technical analysis. Practice, keep practicing and don't stop practicing. Observe your progress over time. Now, for every trade you're going into, you know that you need to observe your trade. Look at why are you winning? Why are you losing? You should know why you win a trade. You should know why you lose a trade. You should know what is happening in the market. So observe your trade and you'll be good. So like I said, there are two things we'll be looking at, two key difference that differentiate live account and demo account. And we just discussed the first one. We say psychology. It's your psychology, which we just analyze. Now, this is a daily online seminar, and I'm your host, Charles Marcel. Every day by 9 p.m. GMT +1, we meet here on the daily online YouTube channel, and you come every day. We share valuable information, just like I've been doing. You come learn great information that will push you to the next business. It could be a new skill. It could be a new business you can learn on this platform. That would be huge. If you're doing one business already, is good. You can come here, learn more skills because multiple business are multiple assets. It's assets that make you wealthy. One business can make you rich, but not wealthy. But when you have multiple assets, that multiple businesses, multiple streams of income actually makes you wealthy and take away frustration and stress from you when that other one is challenged. So here on this platform, you can come learn a lot of businesses. Tell others about this, the daily online seminar channel, so they will bless you and thank you for getting to know about this. You save a soul, no? You can save a soul. tell others, like this channel, click the like button, and so that drop your comment. You have a question, drop your comment. I also encourage you to click the subscribe button and also the notification bell so that each time I'm live like this, you get a notification that we are live so you can join us on the training. Thank you. So we're going straight to the second key difference, which is what? The money involved. The money involved. You see, when money is involved, everything changes. Everything changes. The way you're seeing the trade is no longer the way you're seeing the trade. You know, when you're doing a demo account, your money, your practical money is not involved. So you have this nonchalant attitude. You don't care. Anything can happen. But when your money is involved, then we die here. You see it as a do or die. Every trade must be a winning trade. Every trade must be a winning trade. Market should not go against you. So your thoughts start working here and there. So how do you control your emotions while your money is involved? Number one, take a walk after each trade. Once you place a trade, you've done your analysis, go away from, if you're using your phone, go away from there. If you're using your laptop, shut it down or start doing anything, leave that trade. Because your money is involved, you always make sure you are setting your take profit and your stop loss is in place. And once you do that, you walk away. Don't sit there and be watching the trade. Some people will be watching their trade. How it's going up, how it's coming down, how it's ranging. This market is not moving. This market is going against me. People always have all of that. So what you do, once you place your order, go away from that chart, either on your phone or your laptop, and get busy with some other things. The market takes care of itself. Another thing is to find out the least volatile hour of the trading session. There are sessions that the market is very volatile. If you know you have this high emotion thing, all you need to do is don't trade during high volatile hour. Don't trade during the high volatile hour. Leave the market during high volatile season and trade when the market is less volatile. Understand that. Like GBP USD, Euro USD, maybe late in the nights are not that busy, depending on where you're watching me from. From Africa, late in the night is not that busy, but JPY is busy that period because while Africa is sleeping, the Asian economy are busy. So JPY, Japanese yen, is busy that period. So you're able to know when to trade, when a particular currency have maybe no news, nothing controlling it. You can just do your stuff. Then stop trading after 3 consecutive wins or losses. If you have won back-to-back, 1, 2, 3 in a day, and you feel, I know I'm on a winning streak, I need to keep placing order and keep winning, that's a big mistake. No. People do that during demo accounts because they have nothing to lose. But in live account, don't try that. Don't try that. After 2, maximum 3 winning streak, please don't go into any other market for the day. Let the day go till another day, till another time. Even though there are other good opportunity, don't go in, because if you cannot again, you will give back the money you have lost. So don't do that. Now, another thing you need to do again is, even if you're also losing, you have lost a trade, all you need to do is let that trade go. Don't say, I want to trade more. I want to trade more. I want to trade more to recover my losses. That's a big mistake you will do, That's a big, big mistake you will do, that you want to trade more. That would be a very big mistake. So when you have some losing streak, let it go. Let it go. Let it go. Okay. Thank you. Let it go. Just let it go for that day. Don't say you want to trade more so you recover your loss. Don't do that. Let it go. Don't look at your profit and loss while trading. While you're trading, don't look at your profit and loss. Hey, let me look at how I'm making money. Let me know how much I've made. Let me look how much I've lost. It could cause anxiety and fear for you. Don't do that. Don't do that. Just allow the trade to take care of itself. Because the thing is, your take profit and your stop loss is in place. Always use your take profit and your stop loss. Don't you have emotional stop loss or in your head you have this, you have your target in your head, or your stop loss or your take profit in your head. No, set it there. Your take profit and your stop loss. Always set it. And as you set it there, on the platform, it does a lot of good for you. These are some things you need to know. Always make sure you put your take profit and your stop loss. Very key, very key, very key. There's something I realized over the years. Some people are trading demo account, they just place the order, they just leave it. No take profit, no stop loss. After some hours, after a day or two, the market is just going. The market is just going. You know, the market, and many times, funny enough, I got to realize that the market is going in their direction. I said the market is going in their direction, they are winning that trade. So that's not how you should be. You should be able to be able to plan your trade and trade your plan. Set a target of the take profit you want to get, and your loss target also. Take profit is the amount of profit you want to make in a particular trade. And why stop loss is the amount of loss you are willing to forego if the market goes against you. So that is what take profit and stop loss is. So for every trade you place, always put your take profit and your stop loss. Don't leave the market open. No, say you are monitoring the trade. Don't do that. Place your take profit and your stop loss. Anything can happen. There was a particular trade I was trading one particular time some years ago. I was placing a particular trade. To me, I was monitoring that trade. And truth be told, I was monitoring it. But I was actually, there was no news at that particular time. There was not supposed to be any news at that time that's supposed to affect that currency pair. So the trade was going fine, smooth in my favor, 30 pips, 40 pips. My target was like 100 pips. Guess what? I got up to like 60 or 70 something pips on that very trade. And I was monitoring, everything is in place. It's every little thing I check is in place, and I was happy. And the loss I was big. It was a live account. Guess what? From nowhere, there was an breaking news against one of the currency, and the market tumbled. Guess what? It was 120 pips against me, like 200 pips different. And it went against me 120 pips. That was crazy. I couldn't believe that. And since then, I learned my lesson in the hard way in that very trade. I start putting my take profit and my stop loss. So that is one thing you need to understand is always put your take profit and your stop loss. And once you put that, what that means, that will help you to control your psychology, that this is the level of profit I want to take in this market. And this is the level of loss I'm ready to take in this market. So with that, there's no pressure whatsoever on your side. Whichever way the market goes, no fear, kill greed, kill anxiety, kill the fear of missing out. Don't doubt once you place your order, you know you're good at that, let it go. Don't this overconfidence thing, let it go. Just let it go. Let it go. So that is something I want you to know. I want to show you my screen. I'll show you. Is it something about FOMO here that I had? You see, FOMO trader experience. When you're greedy and you are excited, you want to buy. You want to buy at that time and you buy. But guess what? When the market is bullish, you seem to want to, you're buying. So there's greed and excitement. But when the market tumbles and it comes down at this level, market comes down, fear, anxiety comes into play, and you feel the market is going against you, not knowing that the market is only correcting itself, and you become afraid and you go ahead and sell. You understand? But when the market is bullish and you say market is going bullish, or you're greedy, you place in, before you know, the market will tumble and come down. And at this point, because you already bought and you believe it to keep going up, but before you know, the market, because you're greed and your excitement, the market tumbles and is down. And you say, hey, out of fear and anxiety, you want to sell off. And at this point, you're losing and you become impatient. See, this cycle repeats itself clearly. It clearly repeats itself. It repeats every day. The market will always range. The market will always correct itself. But because you don't understand, because of fear and greed and some psychological trait, you tend to follow the market the way it is. That is a big mistake you will do. And that is why it's not advisable to allow some psychological traits to actually affect you. I believe you have learned a lot in our training today. Appreciate you for hanging out with me today on the daily online seminar. Like I said, tell others about this platform and they will thank you for that. So I'll see you tomorrow on our training, where I bring you another big information that you can either implement it as a new business, or you can use it to grow your existing business. I'll see you tomorrow. Don't forget, click the subscribe button and also the notification bell so that whenever I'm live like this, you can get a notification. Also, like this video so that YouTube will know people are watching it. Tell others about it. Thank you for hanging out with me today. I appreciate it. Thank you.